Hey guys, in this video, I'm going to show you the futures trading strategy that I've been using for the last decade that has resulted in tens of thousands of profitable trades. This strategy, it allows you to remove as much emotion as possible from trading. It allows you to scale your winners and cut your losses early. More importantly though, this strategy, guys, it allows trading to become something that is teachable. Here are some screenshots of some of the accounts that I've grown in just the last 12 months alone following this strategy. My belief is that if you can follow a proven strategy and you can follow rules and you can implement discipline into your trading life, that you can become a successful, consistently profitable trader as well. In this video, I'm going to detail everything out for you. And remember guys, to find out more videos like this, subscribe to our channel and turn the notifications on so you get alerted when new videos come out. So let's get to it. Guys, part one is levels. When we look at a chart, there are really four main candle patterns that we look for. They are a drop-based drop, a rally-based drop, a rally-based rally, and a drop-based rally. Now, these four candle patterns that you see on your screen, they represent the largest imbalance of buyers and sellers in the markets. And guys, as traders, we want to trade right along with those imbalances. I always say that a chart that you see on your screen, all it is human psychology depicted in the form of candle patterns. And when we can find these candle patterns that represent the largest imbalance of buyers and sellers, we can trade with that human emotion and that human psychology. Instead of me just sitting here and telling you what they are and trying to explain them to you, let's go look at some actual trades that I've taken on my live account where I use these candle patterns to find those imbalances. And guys, remember, to find out more videos like this, subscribe to our channel and turn the notifications on so when the next video comes out, you get alerted about it.
All right, traders, so the first one that we have for you is a drop-based drop. And as you can see here, I'm on the Euro futures. And guys, to start, what I want to focus on is the trend. And you can see this is a daily chart indicated by the time frame that we have selected up here inside of our Thinkorswim platform. But we have lower highs and lower lows across the board. So when we have that type of movement and we have to pretend like we don't know where price is going to go. So we identified this area of opportunity here, but we had no idea again where price was going to go. So we had to look at our level odds enhancers and our stacking the odds studies. And the very first thing that we look at, guys, is trend. And on a daily trend, we have these lower highs and lower lows. So if I want to be a trader on a daily chart, the most prudent and the highest probable thing that we can do is trade along the lines of least resistance, and that is to get short. And this is our drop-based drop. Now, using our 7-level odds enhancers, we can see that this is a very good quality level. We have a very strong move away, followed by breaching a new low and a good continued movement downwards. What we can also do is do a measured move of the zone that we identified, and we can duplicate that zone and move it down. And what we really want to see is a 5-to-1 move down. Now, we're allowed to take the trade, and what you hear me say a lot here at Trading Price is the word allowed. And that's because we're a rule-based trading system. But what we can see here is we basically have, if not a 5, close to a 5-to-1 ratio on the distance the zone has traveled from the time that the level was created to the move. Okay, so when I see this level, I know that it's a very good level, and as price comes back into it, there's a couple key things that we want to point out. Number one is I want to take a look at the retracements, and I can see that it's basically sitting at the 61.8. If I drew this from the wick to wick, whoops, I duped that. I duped it again. Holy moly. Let me get rid of that, and I'll redraw it from the wick to wick. And that sits right at the 61.8% retracement, okay? From the last impulse down to the retracement back up, which is one of our odds enhancers, are these Fibonacci retracements, as well as when we come into the level, what we can see is that we are below 60 on the RSI in a downtrend, in a drop-based drop that's tight, that creates new lows. So here's what happened on that trade. We continued downwards, right? And you guys can see on the screen right now the P&L that we got on this trade. So this is just the very first one, the drop base drop. And on the next one, guys, I'm gonna show you a rally base rally and why we might take that trade. All right, guys, so the next one that I have up for you is a rally base rally. Now, what you can see up here is a 15-minute chart of the gasoline futures that I have /RB here on Thinkorswim. And when I go back, I can see the level that we got into, which is a rally base rally. And this rally base rally has a really good move away from the level as far as continuation goes. I would like to see that third candle create a new high. Nonetheless, it does create really strong buying pressure from this area. So when we move away and we come back into that area, I can see this one wick down. Now, what I want to point out is while we have this one wick down, and it is currently, as price comes into that, below 40 on the RSI, which is not what we want to see. However, what we do have are lower lows in price, and a higher high on the indicators, signifying that we have positive divergence in the move. So that's one of the stacking the odds studies that we have inside of our 8-week accelerator program, is not only our level odds enhancers, but also some of our stacking the odds studies that allowed me to get in. Now, the way that I got in is different because of the stacking the odds studies. The size of risk that I'm willing to take, the way that I enter the trade, and the amount of contracts I'm willing to take. And as you can see on your screen right now, we did pretty well on this trade. So worked out pretty well for us, but that is a rally base rally where the buying pressure exceeds the selling pressure, and we want to buy along with that outstanding buying pressure. So the next one that I have up for you guys is a rally base drop. All right, guys, the next one that I have up for you is a rally base drop. And this is one of my favorite candle patterns to take when we have an explosion in price that most of the time results in some type of pullback. So what you can see here is I have a 1-hour chart up of silver, and we have a rally base drop in price. Very good, strong move away. Don't create that new low out of here immediately, but nonetheless, you can see we do have a slight 50% retracement before we continue the move down. Now, we have not made it back up into that level, but as we approach the level, what I can see here on the RSI is that as we enter into the level, about a 70, but what I can see as I move down into smaller time frames is that we have higher highs in price and lower highs on the indicator. So as we're approaching this 1-hour level, we can see that the momentum is shifting to tell us that there's less strength in the amount of buying pressure that's coming from here. So let me go back out to this 1-hour level. I got to give myself a little bit more time here. And as price comes back in, we did not take this trade immediately when price came into the level. Why? Because our stacking the odds studies and the way that we trade here at Trading Price tells us that the most risk adverse thing that we can do is take a confirmation trade, which means price comes into the level. We don't enter it immediately, but as price leaves, we can enter the trade as it leaves. And as you guys can see on your screen right now, we did pretty well on this trade, capturing most of the move down. So guys, this is just the third of 4th candle patterns. The next one that I have up for you is a drop base rally. But again, what we're looking for here are the imbalances of buying and selling pressure that we can trade along with. All right, guys, last and certainly not least, I have a drop base rally for you. It's one of my favorite positions to take in an upwards trend when we have this type of momentum that breaches multiple other highs. So we have a drop in price and a basing where that consolidation occurs, where buying and selling action is going on. Then we have this explosion up in price that breaches one high, as we stall for a little bit, and then we breach a second high, only to continue on. Now, when we come back into this level, we have to notice that we are way down here, down at 30 on the RSI. And that means that we're only allowed to take a smaller position size because the risk is greater. And you can see that price came a little bit more than halfway into our level before it turned and went our way. However, price was in an uptrend at the time, if we can go back, you can see that we are creating these higher lows and higher highs in price, buying a little bit down on the curve here, but nonetheless buying when price gave us an opportunity to do so. And when we did that, you guys can see on the screen right now, we made a little over $10,000 on this particular trade, and wish we would have held on a little bit longer because price did continue to move up in our favor. However, we followed our rules, and guys, position sizing is key. And everything that we talk about inside of our accelerator is how and why we might take trades, but not only how and why, but also the level of risk that we're willing to take. I did not put a full size position on because of the stacking the odds studies that we're seeing here on crude oil, and yet we still made over $10,000 on the trade. So guys, with that, hope you enjoy these 4 candle patterns, hope you understand them, and let me know if you have any questions.
The key is finding out what those levels represent and how to identify them. See, all candle patterns, those drop-based drops, rally-based drops, rally-based rallies, and drop-based rallies, they're not all created equally. It's not the time frame that matters. It's what those patterns represent. That is the key to successful trading. Over the last 13 years, I have developed a scoring module that looks for 7 key level odds enhancers. We use our scoring module to help us determine whether or not we're allowed to take the trade. Now, notice I said the word allowed. Again, not all levels are created equally. So if we don't score a specific number on our 7 level odds enhancers, we're not allowed to take the trade. We also look at 5 what we call stacking the odds studies. Guys, number 1 is trend. And what most traders fail to realize is that trend is relative to the time frame that you are trading on. So many people do this wrong. Number 2 is RSI, how we use it and why we use it. Number 3 is our Fibonacci retracements, when we can use math that where our levels coincide with the math of the Fibonacci sequence, that can also give us an edge. Number 4 are critical areas. It's one of my favorite things in trading that I use on every single trade. And guys, number 5 is our exponential moving average strategy that we use. Each one of these stacking the odds studies, they all play a role in our trading. Do you guys remember when I told you that our goal is to stack the odds in our favor? Well, without 3 of these stacking the odds studies in place, along with a very high quality level, if we don't have those things coming together, we're not allowed to take the trade. Again, everything we do here is based on rules. Now, using these stacking the odds studies, it allows us to catch trends. It allows us to position size correctly. It allows us to remove a lot of that emotion from trading, which causes so many people to fail. It also removes the potential of blowing up your account. The reality is, when you implement this proven strategy, I can look at a chart within seconds and know if it's a trade that I want to take. It allows me to scan multiple markets, several different asset classes, and helps me find what I consider to be the most highly profitable trading opportunities in the market. Now, if you're like most traders, you probably feel so close, but your portfolio, it never shows those results. For whatever reason, you're unable to capture the gain in the markets that the markets offer on a daily basis. If you're interested in actually increasing the results that you're getting in the market, then what I want you to do is I want you to click the link below, and when you do that, I'm going to show you everything that I do, how I do it, and how we put both of those together to help you become a profitable, consistently profitable trader in the market. And remember, guys, to find out more videos like this, I encourage you to subscribe to our channel, turn the notifications on, that way whenever we come out with new information, you guys get alerted for that. Thanks, guys, for watching this video.